Okay. Yeah, now you can start it, I believe. I think I see it working. Okay. So yeah, cool. So yeah, let me just get to this, and then we'll go over some examples. And yeah, so what we're going to be going over today is something I'm sure you guys heard, T talk about many times, and it's the phases of price. This is one of the core concepts to really approaching the market and just any model in general. And it is one of the ways you're going to actually anticipate price. So there's four phases of price. So expansion, consolidation, retracement, and reversal, right? And so each phase of price, basically after expansion, we can get one of these phases, right? Into an objective, right? So if you look here, each phase has its own characteristics identifiable through signatures. We can anticipate a new phase of price after expansion into an objective. I'm sure you guys seen AM talk about this. We have 3 consecutive expansion days. This is all IPTA or phases of price. And so basically when we expand into objective, we can either consolidate, we could either retrace, or we can reverse. All right. So what are the signatures of consolidation? Obviously, sideways range, right? It's gonna look many ways. This can be an inside bar where you have expansion into a high or something. You basically just have a candle inside of this candle's range. That's a consolidation, right? And the thing about consolidations, right? We can't actually reverse from a consolidation, right? If we just consolidate here, we can't reverse from consolidation. So the ideal way to trade a consolidation on any time frame is we manipulate first and then we distribute through this high. So manipulation into expansion, right? That's the ideal way to trade a consolidation. But we don't actually need to, this market doesn't actually need to manipulate to expand during a consolidation. So um, when you're trying to trade into an objective and you see consolidation or retracement like this, these are two phases of price that we like to see on the right side of the curve, right? MXM, if this is our target, you want to see these continuation signatures on the right side of the curve, right? So retracement and consolidation are both continuation signatures, meaning it's not going to reverse from this low resistance, this accumulation, right? All this low resistance that's built. Price doesn't typically reverse from low resistance. We usually create some sort of high resistance and then expand towards these highs, right? So they're looked at as like continuation signatures, right? Um, so that's consolidation. We all know what that is pretty much, but we can anticipate it after a expansion into an objective, right? And that lack of basically displacement in the other way, right? And it just leaving failure swings on both sides is typically just consolidation, right? So retracement is more so, it's almost like consolidation, but we can retrace like deep into a range, but it's an LR signature where you make deep retracements, leaving failure swings. That's the key, right? When you see these failure swings like that, typically this range is going to hold. This is what we want to see with our protected lows, our ranges, our dealing ranges. We want to see this low resistance be created, some sort of manipulation to then expand into these highs, right? So again, this is what we want to see. If we're bullish, we want to see these retracements. We want to see failure swings on the opposing side of our retracements, right? And then reversal is essentially expansion met with expansion. So if we have a key area and you see price expand into this and you want this to be a reversal, if it expands away aggressively, right, this is exactly what we want to see. For any, we want to go from expansion, retracement. We want to see that reversal signature rate, taking out a low or something, right? We want to see expansion into the low, expansion away. This would be the trigger for expansion, right? So just like consolidation, by the way, I forgot to mention, if we expand, retrace, we must expand again. right? So that's why they're continuation signatures. We don't reverse from a retracement. You don't reverse from a consolidation. Um, but this is essentially expansion method expansion. This is the reversal signature. We like to pair this with SMT and a CSD to confirm this. So essentially, this is the approach. You want to frame a reversal off of a high. If we expand into it and we consolidate, this is not a reversal. We would revert to this high to be the reversal point now. We would want to see expansion into this high, expansion away. Now we have a protected swing trading away from this key area. And now we can expand away, right? If we expand into this and retrace, right, we don't manipulate the external high, then this is not something we want to trade away from. We don't want to trade away from failure swings, right? So again, this would be more of a continuation signature. We know price is not likely to reverse from here. Um, so this range would be, assumed to be protected. We expand into that. Now, a thing about, you know, leaving L or NLR, you have to check if there's SMT here, right? If there's SMT here, then it can be a protected high, right? If we do something like this, it looks like failure swings. Check if there's SMT. If there's SMT, this is essentially a protected high, right? The other asset took out this high. Um, so yeah, we want to look for SMT and change state delivery to confirm our reversals. Ideally, there's always SMT there. So that's pretty simple, right? Now I'm going to show you this simple rule that I use um, to basically trade away from key areas. All right, so if you look at a key area, typically we reverse in one or two candles, and it's going to look a couple of different ways. All right, so I count candle one as the candle that hit the objective, okay? And it's going to close a couple different ways. It's either going to close a reversal candle where candle one actually, prints that candle to closure. Um, and there's already a reversal inside of this wick. And then we can expect the next candle to expand away, right? Or it's going to close an expansion candle, and we can revert to this candle's high to basically print a reversal off of that, right? And if we want to trade a candle two, if we want to trade a reversal day, we want that small opposing run, right? That supports expansion away from this, right? And this is the other scenario. Like I said, one or two candles. So one candle here. Why would I not trade this candle here? Is because the opposing run is quite large, which doesn't support an expansion day. So I would revert to the next day to be an expansion, right? So this would be an invalidation for me to trade this day. So I'd wait for the closure. Now, this day here, this candle two has to print a reversal candle. Okay, that's the rule, right? One or two candles here, and I need to see candle three expand away. It's like the same thing, right? That he trades uses, right? But I trade candle two, and we can anticipate candle two expansion or a reversal in one or two candles because this is typically how it looks. And I'm going to go over some examples now. The reason why, as well, the logic behind this is because if we're going to trade away from a key level, right, we want to do it quickly, right? We don't want price to hang around for 4 or 5 candles. That wouldn't be a strong key level, right? That'd be more so like consolidation or just not something that is like relevant. It wouldn't be a relevant, you know, key area, right? Key areas being order blocks, highs and lows, and fair value gaps as always. My favorite key level is a external high or low. But let's go into the monthly chart here. So as we see, right, price expands away, right? And then we hit this premium fair value gap. Candle one being an expansion candle. We want to see this candle either expansion into reversal or print the reversal. There's two ways an expand or a reversal candle can form, right? It's either an expansion where we take out the previous candle's high or low, right? And we expand away from that. So I'll make this green. This is the one we want to trade, right? Because if you want to trade expansion, so if the candle one hit the key level, like I said, we revert to this high. Ideally, we take out this candle's high, form that small opposing run, and then this would support expansion. And if this is like the daily time frame, you'd want to see this day here, form that hourly CSD to confirm the reversal, right? Or it can form like this, where you make it a large opposing run, right, which doesn't support expansion. So we would revert to the next day to expand. So if we have this large opposing run, we don't really reverse off this high right away. We kind of expand past it, then that's your invalidation, right? And then we look for the next day to have that small opposing run, some sort of invalidation internally to this candle too, where we want to see this candle 3 high form to then expand away, right? Intra-candle CSD and all that. So yeah, that's the two ways a reversal candle can form. But I think we already do that, but I just wanted to go over that. So here, right, we have that candle 2 closure, so it meets the requirement. I want to see this candle expand away. You see how it hits this key level? It forms just like candle 1 over here. It forms that expansion candle. So here we have that small opposing run. So we can trade this candle, right? This is the monthly time frame, by the way. This is fractal. I use this on the 4-hour a lot, the hourly, all that. So you see this small opposing run, right? Expansion away. Then we hit this high over here. These equal highs, right? Could be an easy draw. Um, right. So we have this candle close here. It's not a reversal candle, but it's also not really an expansion candle in a sense, right? We don't close to the highs, but as you see, we have this opposing run, take out this high, relatively small opposing run, and we come back into the range, right? Now, these series of opposing candles, the thing about this rule, by the way, guys, is if there's a very large, like let's say fair value gap or opposing like candles, then this rule isn't really applicable. It doesn't really make sense, right? Because that's just a very large invalidation area where it doesn't really make sense. So highs and lows are my favorite, key level for this because I mean that's just you know, I hope that makes sense, right? Because it should reverse like a shallow, run above it and stuff. It's just a lot more simple and a lot more refined, and that if that makes sense, kind of. But in the rule also, I have this rule where if it is a weekly, let's say the fair value gap is visible on the weekly time frame, then I want to see a weekly closure, right? I want to use the model on the weekly time frame. It's a daily swing low. I'm not going to use a 4-hour model. I'm going to use a daily model. Does that make sense? That's another thing I forgot to mention. But here, we can also use swing points, guys. So swing points, right? This is what this is all revolves around, right? Swing points. Every reversal creates a swing point. That's the T trades model, right? So here, you have this key level, you have a swing point, right? So this candle here, this next one should go, if this is going to hold, right? Because if this range is going to hold, this swing point is not going to get taken out. There's no reason to, right? It got created in premium, discount of this range, right? No reason to take that out. So we should create an open low, high close, right? But then we can break it down a little bit on the weekly time frame. And what do we really see here, right? We can use this model to really invalidate key areas as well. Because if you look here, right, just look, let's just go over the phases of price real quick. We have expansion into premium discounts range. We expand away, right? Reversal signature. Expansion into an objective, a high or a low. We consolidate. So again, not a reversal signature. We will revert to that high as the manipulation, right? So this is AMD reversal. There's AMD continuation where we're bullish, we consolidate, we manipulate. This is the ideal one we want to trade because we know for a fact that this can't reverse usually, right? So this is AMD continuation. This is AMD reversal, where we expand into a higher low or an objective where we want to see price reverse. If we consolidate, we know that price can't reverse, so we know that this high needs to at least get taken. So if we see that expansion into this high, expansion away, this is AMD reversal, where now we have a protected high we can trade away from. That's what we see here. Again, there's only two ways. You see that here, right? We expand away, we retrace. So what is retracement? An LR signature. You see these failure swings? So like I said, going to be failure swings. Then we can revert to basically this high. It can be viewed as consolidation as well. Like I said, sometimes they're the same thing almost. But you have a fair value gap, right? So it retraces to a key level. And where do we form that reversal, right? in 2 candles, we form a swing point. So typically when you form a swing point, you want to see the fourth candle expand if the third candle did not. So that's what it does, right? And here we see expansion into this low. And again, we get that new phase in the next candle, right? This candle hits the key level, we get the new phase in this candle. So this is why I use this rule, right? Because we get that new phase usually in 1 or 2 candles. We hit the high here, we get the new phase in 1 candle. We hit this fair value gap here, right? It didn't reverse this candle, but what did I say? 1, 2 candles. This candle needs to be the low of the reversal point. So candle 3 would expand, right? So you see how this is, you know, can be viewed many ways, but it's not something you have to follow strictly. It's just I want to put more focus on the first and second candle. Doesn't mean that we can't get a new phase of price, after 2 candles. That's not what that means. Um, but anyways, we expand into this high. Now, what do I notice about really the opposing side of this range? I see failure swings here. So we expand to that. But what do I notice over here? I also see failure swings, right? Look at all these lows, right? No real manipulation. So we're going to use phases of price with this model. As you see, this candle expands into this high. Where does the reversal happen? The next candle, we form a swing point, and then we expand away from that, right? And now we see that this here is failing to offer that rule of price expanding in two key area or 2 candles, right? So this typically is when this is like a weak key area, right? So we can expect a next candle basically to fail, like this whole key level to fail. So you can use it as an invalidation, use it as confirmation. Um, but yeah, let's go over to some more. Let's go to the weekly time frame now, or I was just on the weekly there. So we went to the monthly. Let's go over this as well here. Why not? So we expand into this high, way to the left. Another thing as well, though, to kind of be careful of is using stuff way to the left. Now, in this case, it works, but that's because I'm using this is a monthly swing point, so I'm going to use a monthly candle closure, right? So as you see, we have this opposing candle here. Again, it forms a reversal in the first candle, so I want to see this next candle expand, right? If it forms the reversal in the first candle, I don't really want to see this get taken out, right? This doesn't really make sense. So you see back to back here, where we hit this key level, clearly a candle 2 closure. I want to see candle 3 and 4 expand this high. Here, again, large wick, small opposing run, supporting expansion away from that. So we get that back to back, right? But if I was to basically use like, I'm not going to use like a daily candle closure here, right? Because it's not a daily swing point. So this is what I'm kind of telling you guys to be careful of using this with like stuff way to the left, because you're going to get caught a lot, possibly. So if we just look at, some of the stuff here, we have this low. This is why I love using a swing highs and lows. We check out this low, next candle expansion. It's also a candle 2 closer right here. Expand into that, form reversal. So candle 3 expansion right here. We hit this low. We get some sort of new phase price sweeping up this low, right? More so just consolidation though, right? And like I said, it expands. If it's going to fail to reverse off this low, where is it going to seek, next external target rate? This candle hits it. When do we expand away? That very next candle, right? Into this fair value gap. If we're going to get a new phase of price to come back in this range, when it's going to happen? The next candle. You know what I'm saying? So here I want to go over some of this stuff though, because this is really clean example of the phases of price. So I said previously, we have an expansion is high. So look at the signature expansion, the expansion into lows. So what can we expect, right? A new phase. This is when we get consolidation, right? And then we manipulate and then we expand. See that? See how we can use phases of price to already anticipate what price is going to do. But I can go here, right? And see this is a consolidation. You manipulate the range low first. So like I said, we can't reverse from this, but look on the opposing side of manipulation. If there is no protected highs, you see this all these failure swings here? This is when you ideally we want to trade back to that, right? And this is when we use SMT. So if I pull up the correlated asset, this is why SMT is so key, right? We have a clear divergence. And then we get what? A CST to confirm that. So now I have Monday. So the previous week manipulated what I expected the next week to do, right? I expect it to expand into these highs, right? So I want to see a weekly profile align with that. I want to see that small opposing run early week being basically created inside of this opposing candle. This is what we get, right? And we get a very weak closure here. You can expect that next day to ideally expand from this wick here. And you wouldn't want to see this get taken, right? Because after manipulation, right? Once we form that low in premium discount, it's like the low risk buy or sell in this case. We don't want to see it come back, right? And we can use that same logic here, where this candle here, we hit this opposing candle, which is a key level, right? So I want to see that next day ideally expand. You see that? See how you can use it on any time frame, really. So yeah, and we ultimately get there. We expand this high again, new phase of price. We more so consolidate. We take out that consolidation low. We expand again, right? You see the phases of price here. When we expand into a high, we don't form a reversal at the high. We're going to expand again generally. This is where you want to look for SMT and all that. If I go to like the 4-hour chart or something, you can clearly see a consolidation. So any manipulation of these lows is the trigger for expansion. So let's check if there's a divergence here. Okay, so on 1800. What's okay? Number 6, 6 o'clock. Number 6. Okay, no divergence there. Number 6. Yeah, I can't really. I don't think I spot one at first glance here. Okay, I see one here though. Dates is December 1st. Okay, so it looks like what day was this that made the divergence though? December 5th, we took out the monthly or the weekly low. So huge divergence on December 6th, right? This divergence. So if the next day, the previous day manipulated, right? And we already have this is gonna look something like this. If the previous day manipulated, right? This is a new open, by the way, for the week, right? We already are not going to trade away from this, right? We're not going to trade away from these highs. We're not going to expect a weekly profile bearishly. When we put in a low and form that divergence, then we expect to expand, right? That's what we get here, essentially. This is how we use phases of price, essentially. Um, and we can use it with use this logic with really any time frame, really. This is how I approach it. So if I look here, or hold on, let me try to find an example that makes sense here. Put a gold or something. All right, let's look here. So we can use these lows to the left, right? You see this candle hits this key level. I want to see the next candle expand. Uh, we have this candle here, tagging the new week opening gap. The next one expands. So yeah, like I said, this is fractal, and yeah, that's pretty much it. I think that's it, pretty much here. But yeah, this is some really clean example, right? Expansion, some sort of consolidation, right? And then we manipulate the highs, expand away again. And if you look here, we also have SMT, right? You see the phase of price here too, right? Expansion, consolidation, expansion. Like I said, you don't need to manipulate these highs. Ideally, that's what we do. Kind of like this week here. So someone asked me in the chats, what do I think gold is going to do? Coming to the week, what did we see the previous week do? you expand it into this high and expand it away. So what signature is that? That's typically a reversal signature, right? So if we're putting it in a reversal, then what do we seek? Right, external range liquidity. So ideally I wanted to see something like this. So after expansion, if the previous week expanded, basically printed a large range for the previous days um, prior to the weekly open. So like late in the week, if we expanded, then usually the the early on in the week, we're going to like consolidate, and ideally you want to form an established high of the week to trade away from. We don't do that because you don't really have to. Like price doesn't have to do that. See that? We kind of just consolidate these 2 days, and we should expand again. But this is not really what you want to see to trade this. I didn't even trade gold because I was waiting for that more so. I was ideally something like this would be perfect. This is textbook, but like I said, price doesn't have to do that. If you go into this week here, I'll just go over these 2 days that I traded, um, just to because I referenced uh, that rule that I use with just IPTA in general. So you see here that the previous day expanded into this low. So what we pretty much have the expansion, consolidation, manipulation with SMT at this low, right? So typically, right, you need to envision it like this, where we actually manipulate this low, and then we confirm this manipulation really on a lower time frame, but we actually get the daily closure here, which is even more added context. And when you see price fail to really present that model where we don't trade away from this high, then where are we going to go? We're going to go to the next draw here. All right, so coming into this day here, I was trading to this high, right? So that's the narrative. Pretty simple, right? Very simple. I'm just gonna change this high. And then if you guys have been to the course, you know that here is the Thursday counter weekly profile where we have internally to the weekly candle, we have 3 days of consecutive expansion, and Monday is the low of the week. So this sets for a really clean narrative to trade back into the range because we expanded into an objective, right? So new phase of price. Um, and then here, you go to the correlated asset, we create a divergence, which even adds more to this narrative. So you see here on the correlated asset, like I said, we form this divergence here. So you see expansion, consolidation, manipulation, distribution into this high. So it's expansion, mouth expansion, essentially. So we'd be targeting this low. So let's go over these 2 days here. I'll show you my trades. So this is something I'm going to cover maybe next stream, is how I look to trade the daily range and stuff. I'll just go over it briefly here. So let me draw this right here, and then I'll cover some questions. So here, coming into the session, which is about 8 o'clock for gold, that's really when you want to start looking at gold and stuff. We also have 8:30 news, so keep that in mind. When I come into this daily, you know, price action here, I see that there's definitely no established low today. Are you going to trust these lows to be the low today? No. Even if we change the state delivery here, I'm not trusting that. Right. So I want to see a manipulation that creates the daily wick here. So after manipulation, what is the trigger for expansion? Right. If I go over here, I deleted it, Rick. All right, I deleted it. But the trigger for expansion is manipulation. This is how we actually anticipate expansion, right? And it also creates the daily low. So I can trade away from this in New York because it's a protected low, right? And notice how there hasn't been any expansion. So New York is the only session that can expand, right? And so on use a time driver with this, right? So if we manipulate a relevant high or low, some relevant area, even if they prior to a news event, then your confirmation is the news event expanding away from that, right? So here we have SMT, we have a CSD. So this SMT here, by the way, right? So we have our two confirmations, right, and news as well. Hold on. Oh, never mind. So So if I break this down to the fractal model, right? Candle 2, closure. I want to trade next candle, expansion, right? Because now I have the low of the day confirmed. And what do we see here? Consolidation, manipulation, expansion. So you see this, it's almost like a V shape, right? Expansion with expansion. This is the signature we want to see. This is a reversal signature. So we can see that on the lower time frame here. And so after expansion into this high, I can expect a new phase of price, right? And I want to wait for an established low to be formed, creating this wick, much like the daily time frame. I want the low of the candle to be an established low. This is what we get here, right? We sweep out this low. It's almost like low consolidation. Sweep out this low, form an ideal swing formation. E-Trades teaches this in its course. This would validate the wick of this candle. And what we want to do, we basically want to be positioned around the opening price of candles. So notice how I'm positioned around the opening price of the daily candle, and now the position basically around the open of this hourly candle. So now we're just aligning expansion candles. Typically, you want to be involved around the open so you can catch the expansion of that candle. So my draw was this high over here. It's like 3R or so. And I just took the whole position off there. Right. So very, very beautiful new move there. So let's go to the next day here. Play it out. We also had news this day. So let's just go over this logic, right? So we have expansion, more so just ranging, consolidation, manipulation, distribution, expansion into a high. So what can we expect? New phase of price. We get consolidation, meaning that we're not going to reverse from this point. I'm going to use this as a reversal point. AMD reversal, right? Expansion, consolidation, manipulation, expansion. You see the expansion, with expansion, that's what we want to see. The retrace. Why is this a retracement? Leaving failure swings. It's also slow. It's this slow, choppy, lethargic movement back into a PDRA. And then it gets confirmed by this chain of state delivery. We also have SMT here. This sets for a very high probable London expansion, right? So you have Asia manipulation and expansion, London retracement, and then expansion, right? So we open New York session kind of just in the middle of the range. So typically when you open up in the middle of the range, what do we need to basically trade, to basically get on side with this expansion? You need to trade it from a protected high or low. That's literally how simple trading is. You have a draw on liquidity. All you need is a protected high or low to trade away from. That's it. So that's what we have here, essentially. So we have news at 8:30. So I'm going to let that pass. I'm going to use this to my advantage. So here it is. So what we do here, we put in a protected high, we form SMT. So manipulation, right? Inside of a key level. So this 30-minute fair value gap. And again, I'm trading a candle 2, by the way. I'm not waiting for this 30-minute candle to close. This is more of like an AM logic, but it's also like T trades, right? Where we can anticipate this reversal happening because it's in a key level, right? So I'm just entering here. I put my limit right here. I don't put my stop loss way up here, personally. Put it more so like above the constant correction of this because this is going to hold. It's not going to come up here after manipulation like that. So I target the previous day's low, which is also just daily fair value gap. So it's really just external on the daily to internal. Yeah, you get that expansion away, right? Who is messaging me right now? Okay. So yeah, those are my trades. And we see the logic being applied, right, of phase of price. So now I'll do some questions, and yeah. So make sure you at me with your questions. So okay, there's not too much. Okay, that's good. Okay. I feel like I understand most parts about the framework, but I need refinement in my entry because I found out that if time I have bias correct, but my entry got stopped. So how do you find high quality entries? This is something I'm really going to cover next stream as my approach, but I essentially traded with from manipulation, and that's pretty much it. I have a continuation. Um, you know, this is basically I'm just gonna like draw something for you real quick. So ideally, I want to trade the manipulation of the daily range. So let's say we open up here, the daily open, let's say, and my bias is bullish, right? We're drawing towards something. This is how I basically use daily profiles. So let's say we expand the previous day. Let's say we consolidate in Asia and London session, something like this. I come to the charts, I see no established high or low today. I want to trade the manipulation that creates the daily low. Right? So I'm trading this. So this is where you're gonna see a fractal model, like a candle two close right here. You trade candle three higher. But just like you saw in gold, this is like my bread and butter, essentially, like just trading with manipulation. This is all I look for, guys. Like literally manipulation at the low of the day. This would create the daily wick, essentially. So it's a very simple approach. In the previous two sessions, the way they form, you're already going to know what you're looking for. You're already gonna know where um, which low we should reverse off of. It's something I'm gonna cover later on. But essentially, I look to trade here. This is my favorite area to trade. Basically, after this puts in. So again, I'm using the same logic where the candle hits this low. I'm going to trade the next candle ideally, right? Because I want to see the reversal happen in two candles, one or two candles. So the thing I just showed you is what I use every single day with highs and lows mainly. This is where I look for SMT as well. And then once this is put in and confirmed, um, then you can look for continuation signatures where even on a lower time from here, I want to see some sort of protected low, which is going to only be, so let's pretend this is the hourly time frame. Let's say this retraced into a fair value gap, right? So it's just gonna look something like this. Let me move this over. So let's say the hourly open is right here, maybe right here. So let's say the previous 1 hour candle hit this fair value gap. I'm gonna look to trade that next candle, and I need protected low to be formed inside of here, which would be manipulation. So it's gonna look something like this. If I can draw this correctly. Right, we come into the low, we create some sort of protected low with SMT ideally, and then it gets confirmed. So now I'm just looking to trade the next opening price of that next hourly candle. And if I can draw it here, might as well. So we're gonna open here. And so when you anticipate a low being intact, you're always gonna have an invalidation point. So in this case, it'd be like these opposing candles. So this is where you'd want the low of the candle to form, right? And this is where you're gonna get a lot of intra-candle chain of state deliveries, which I love this concept. Um, one of the best concepts taught in the course, in my opinion, because the wick is created, right? Basically, it just goes open, open, low, creating opposing candles, and then it gets closed over, validating the wick. So now you're just basically getting in around the opening price of that candle to catch the expansion. Um, so it's a simple logic, but essentially, like I need to see manipulation at the low today, and ideally, I look to be involved around this area to basically trade into these highs and then manage that beyond that. But for continuations, right, I need to see some protected low. Like we might form SMT here, key level, lower time frame manipulation, SMT. That's how I typically trade it. But I use a lot of daily profiles and just open high low close logic in combination to that. They have to agree. But that's something that I will go over next stream. But I would really focus on trading away from manipulation, bro. One of the easiest ways to trade and approach the market is just to man that, right? It's going to be the highest probable trading is when you're trading away from a protected high or low. It's just a fact. Like I'm not going to long. This is the day that I would miss. Let's say Asia just kind of just fades up higher. London fades up higher. I'm never going to long this day in New York. It's just not going to happen because I'm not going to trade away from a bunch of failure swings. That's just a day that I simply miss. you know? And price might expand. I don't care though, you know? You have to demand what you want to see and just trade that. If you just try to trade everything, if you go into a day and you're trying to trade every single day, then that's just a bad mental cycle to be in. You're going to get very confused. I say study one, specific scenario, get really good at that, master that. So in this case, like manipulation is what I trade, and that's enough for me. Don't really need to trade anything more than that. I'll show you an example that I traded last week as well. I'm going HG. This example here where we have a manipulation the previous day, as you see, a candle to closure. So inside this candle, I want to trade expansion, right? But I need to see an established high to trade away from that. And that's what we have here, right? If I go to phase of price, expansion, so expansion met with expansion into this high. So new phase of price once we take out lows. So see how fractal this is? So new phase of price. So I know this is a what? A continuation signature, meaning price has to expand again. But in order to trade consolidation, what do we want to see? Some sort of manipulation, which creates the daily wick. So this is key, right? Small opposing wick supporting expansion. I already know that when price manipulates and I see that the opposing side of that range is just failure swings, like price is more likely to expand, right? So when I see this 30-minute closure, right, this is all I need to see to be in this trade, right? So then I catch this expansion lower. Um, so yeah, this is how I approach the market. If you look at any of these days, there's nothing here. If I go into this day, you have the candle to close, right? This is perfect. I would look to trade this lower every single day, like every single time, right? Because we have expansion into this high expansion way. This, in theory, is a protected high in most cases, right? We leave these fair swings as well. So when I open the day, I don't really have a key area that price can form its wick off of besides this high. Like I want to see consolidation, manipulation of this high, expansion away. But when I see this, you can look at it two ways. I see expansion met with expansion and consolidation. So really, this is the only scenario that can happen, right? Because we know that price is going to expand into this high. You see prices expand. So really, it's just expansion, consolidation, expansion. But this is not a relevant reversal at all, unless there's some sort of SMT with this pair, which I don't know of. But when I see the previous day do the same thing, it's literally the same thing as this, then I'm more than confident in trading that continuation, right? It's literally the same thing as a scenario where we open up here, more so just consolidating. I don't really have a relevant opposing candle for the high of the day form. Maybe this fair value gap. But if we don't have anything like that, and basically the next day is going to print some sort of protected high, and that's what we see here, where we just manipulate and expand. Right. So it's a very simple approach to trading that I recommend, honestly. But I'll go into that next week or something. Hi, Garrett. I have a question. For example, on gold, after the close at weekly, could we look for long expansion? And another thing, I don't understand how to tell when the expansion wick forms. So one thing about the expansion wick is when the wick hits a key level and then forms that intracandle CSD. I'll go over T-Trade's course about that. It's pretty good. Um, and I also want that small opposing run because we only want to trade expansion candles. And when you don't have that small opposing run, it's hard to anticipate a candle to closure. You don't want to be involved into this, right? So like here, if I go to this day here, right, and we can apply this logic, like I said, right? We take out this high, we form the reversal, and the next candle, I want to see expansion away. What do we do? Hit this key level, next candle expands into these lows. We get a new phase of price, the next candles, but it's consolidation, meaning price can't reverse. It can't reverse from this low typically, right? So we want to see price expand into this low. For either continuation, we're just basically reacting to how price trades into this low. What is the reaction? Clear reversal, Monday opened low. So what can we expect the rest of the week to do? Expand. So this candle hits this key level and expands. So when you go into this wick here, what do we have? A opposing run, right? Expansion, more so consolidation, and then expansion, mouth expansion. This is the type of order blocks you want to see. That's literally how reversals form. Um, and yeah, right. It validates the wick once price closes over the series of opposing candles that created the wick. That's one way you can do it. Um, but yeah, that's probably the best way to do it. And you just want to see price ideally hit a key level. In this case, not really a key level, to be honest. But there's plenty of times where it does. So if I go to this day, for example, where we had that framework of the previous day manipulating, right? What we have here is just Asia consolidation. This is my ideal scenario. This is exactly what I'd see. I like to see the high of the day form manipulation. So the wick is manipulation, and it's just confirmed by CSD, right? If you look on the opposing side of that, you have consolidation. So basically, this opposing run supports expansion. It supports an expansion candle, which would support the phase of price, right, of manipulation into expansion. So the small opposing run is supporting expansion away from manipulation. It's kind of how I view it. How do you decide when to take a reversal CSD and when to take a continuation CSD? Um, okay, hold on. Oh, like, yeah, sure. So it has to be in a relevant area, right? So like I said, this example here is where I expect, like this is the only area for the higher the data form essentially. I wouldn't want to see it go much higher, right? That wouldn't make sense. I don't want to see it expand away from from these lows. So this is something you're going to get like a feel for. Just takes time to really anticipate where highs and lows should form, highs and lows of the day, quickly. Um, but yeah, I just have a really good feel for it, I guess you could say. For continuation, it's when we haven't reached the draw yet. So that's the only way will ever look for a continuation. I'm never going to look for a continuation on a day like this. This doesn't make sense, right? I view this as I missed a move, right? The daily range is already expanded, very much exaggerated. So I want to be involved, like I said, in this manipulation, essentially, before we expand. But inside of this candle here, we might have some sort of like continuation lower time frame before we hit this high. Because after we hit this high, we could more so consolidate, right? Or just get choppy price action. So that's not typically what I want to be involved in. This is a good example of a continuation on the hourly time frame where we have price just expanding to this high. It's met with expansion. So again, this is a high that I would assume to be the high of the day, just because the signature alone, right? Expansion, met with expansion. And then we retrace. Notice how we didn't hit a key level. So at the point of retracement, we didn't hit a key level yet. We didn't hit an objective. So I can assume that this can be a continuation, right? So this is when basically I want to look for um, continuations. Uh, this day too, possibly as well. Is when I look left here, I can still target. We have stuff to target here, right? Where I have basically a Monday low of the week expansion. I can expect the next day to print a pretty large range. And when I look here, when like prior to this large expansion, I see the daily range is not very large, right? I can still expect continuation. So this fair value gap here, all right, we take out highs. So what can we expect? A new phase of price, more so consolidation. You manipulate into this fair value gap, creating that small opposing run. So like I said, I will actually trade the first. I actually didn't say that yet. That's probably something that will go later on. But this candle here forms an intra-candle CSD. It has a small opposing run that hits a key level. So like I said, it's going to reverse in one or two candles. The only way it ever reverses in one candle is when this candle opens up near the key level, right? You see this? Or actually, did I hit this? No. Okay. Yeah. See, it opens up near it. This allows for the candle to create that small opposing run into it, and then we would just need the CSD basically. But that's very rare to happen, to be honest. So I don't really mention it. But AM even talks about this. in his course, I think. He talks about that time to time. But yeah, I'll go over like my whole approach later on. So some of these questions will probably get answered next week or so. Expecting a consolidation reversal here. What is this? Okay, so it's more. It's just like a range high to low. Yeah, more so consolidation. You see this little low internally. You see how we tag that low? On the opposing side of that is these equal highs. So you could have anticipated that to be taken, right? Kind of ugly though, too, if I'm being honest. And you have this monthly, basically, this small opposing run supports expansion, right? So this is something I'm gonna go over maybe next week. We'll do open, high, low, close, and just how to align models with how candles are forming, and just how open, high, low, close candles are like formed and stuff and all that. We'll go over like next week because that's another core concept to learn. Hi Garrett, I have a question. For example, on gold. Wait, I already went over this, right? I don't understand how to predict. I didn't even answer this though. For example, on gold after the we look for long. So let's look on gold. You're talking about can we expect longs the next week? I wouldn't. Okay, so we have an SMT right with the correlated asset here. We have a you know somewhat of a long wick. But if I'm going off of gold just here, if we're gonna come back into the range, then the next week would do what, right? Small opposing run respecting some sort of PD area inside this wick. Open low, high close, right? We start to disrespect. So let's go on the daily here. Yeah, like you see how we can apply this rule to literally every single time, right? Like this candle hits the key level, large, it's a very large range, so we can already anticipate a new phase, especially after it takes these lows. And then we get this, right? New phase of price coming back to the range. And then we form like SMT here with the correlated asset. If I do remember right. It's just like intraday instead of this candle. So we expand, right? So we have now a swing point, right? We have a target, right? Failure swings here. So if I go intraday right here, typically you want to see basically an open low. You want to see this hold here. It's as simple as that. This would be your invalidation, and it's inside of that wick, actually. And here we'd use the whole candle here. I think no, we wouldn't. This is a weird situation where you can't use the wick, honestly. I guess you can actually. I guess you could, but I wouldn't even want to see price come down here, to be honest. It's like pretty far. Um, yeah, when price kind of opens, it's a large range, but it's not an expansion candle. It's not really a reversal candle. Kind of just closes in the middle of that range. It's already at 50%, so it's weird. It's like a weird scenario. Um, but yeah, we could, anticipate. We'll just see. It's like it's very simple, right? This is why profiles confirm pretty much everything. If we see a Monday consolidation after taking this high or something, more so do this. Tuesday manipulation. This would be expansion, consolidation, manipulation, distribution, something like that. But if it does something like this, consolidation, manipulates a high first, then I probably want to see price come back in the range. Just depends what we do. But if you want longs, then this fair value gap is really the only area for that wick to form. I have a question regarding handle numbers. Is it always revolved around from a set time or where closes are in the model? I have a question regarding candle numbers. Is it always revolving from a set time? Um, so yeah, like if I think I know what you're asking. So like let's say if we use like weekly profiles, like so like here, right? Right. This would align with a weekly profile if we expand away from here, right? Because now we have a Monday low of the week, right? Which could support a bullish expansion week, right? And you need an expansion weekly candle to get to this high. If I got the weekly time frame prior, basically to the reversal, we have that small opposing run, right? That supports expansion. I don't know if that's what you're asking. This typically how you like align like a model with the candle. This is something I'm gonna go over next week though. So this bullishness here is basically supported by expansion weekly profile, right? But it doesn't mean you can't trade. It doesn't mean you can't fade that weekly candle. Again, this is something I'm gonna go over like next week and stuff. I don't really want to get like too off topic, but yeah, we'll save this question for next week, pretty much. But yeah, if you have like, let's say a candle, just use another example, right? Uh, like here, I guess. You have the previous week just being an expansion, right? 5 days was expansion, so we can already expect a new phase of price, right? I already remember this. We have the previous day creating SMT here. So if the previous day is manipulation, then what will the next day do? Expand. That's also aligned with time. It's also aligned with the new weekly open, right? So if we're going to get expansion, okay, this is also just like weekly time frame, right? Previous week expands into this fair value gap. We're gonna get the new phase of price in the next week because we're not going to reverse this week because the open is very far away, right? It also closed an expansion candle, so this is where we look for the next week to basically form that reversal, if that makes sense. Here you see like if we're going to reverse off this low or get that new phase of price, it's going to do it in this candle. You see that? This candle one, an expansion candle. Now, ideally, we sweep out this low, ideally, but we don't actually have to do that. We don't actually have to sweep this low. It is form a swing point essentially. Um, and you look here, if we were going to respect this fair value gap, first you want to see if there's a reversal inside of this, certainly inside of this wick, right? We have a swing point. Uh, your invalidation essentially would be this fair value gap pretty much. We have price aligned. You're gonna use like 4 hour or something. But here is where I would want to see reversal off this low probably. Right? I'd want to see like some sort of like manipulation and then expansion. So when we don't do that, so we just trade through it. So then I would expect this to fail, this weekly fair value gap to fail, and then I would target its low. See that how simple that is? So you can use it as validations and all that. We have like this fair value gap here, clearly form a reversal, next candle expansion here as well, right? This candle hits key level, next candle expansion. We take out this high, right? What do? We consolidate. So this is a continuation signature. So when I say that phase of price support narrative, where like at the opposing side of this key level being hit, we have just have the signature of a continuation. So it would support that obviously, right? It would support this being the reversal point because we know that price isn't reversed from consolidation. Does that make sense in a way? That's why it's so important to recognize and have this in your trading, right? Very, very key understanding. And this was something that T Trades talks a lot about. Um, all right, so where are we at here? For S&P gold, I saw you use yes. Can you explain how that works? Well, it's like right, it has if you check Euro USD, right? What is correlated to USD? It's the euro. So it works as well as just silver, right? Which ticker would you say trade the most? Probably indices, CL to oil and gold. Probably those three. Going back to energy, if the objective is not met, how do you know the bullish draw not being met is not bullish S&P? Wait. Oh, yeah, I wouldn't know. So like when I trade like stuff that I don't know what the SMT is, I have to require manipulation. Like I have to require manipulation. I'm not going to assume that there's SMT there if we create a failure swing. You know, can we back test see the price action? I mean, wait, what time is it? It just hit an hour. I could schedule a back test stream. Like I can dedicate a whole stream to that. But yeah, this just hit an hour, so we'll probably wrap it up here. Don't want it to be too long, guys. Hopefully you guys learned something. Um, Next week we'll go over open, high, low, close, and how you can really incorporate the two. Right? If you know T-Trade's model, then it's literally open, high, low, close, and phase the price. That's literally all it is. Yes, we can do a back stream eventually. Yes, sir. No problem, guys. So yeah, next week we'll plan to do open, high, low, close. I'll show you how to incorporate the two because you're going to notice that a new phase of price is going to wait for that next open. Hence why I have the two candle rule. Um, so yeah, if you guys have any questions regarding this rule and stuff, make sure you ask me because it's not typically something that's taught from the lens. So just ask me. Um, but yeah, you can use the fractal model with it and all that. Yeah. All right, guys. So I'll catch you later.